Is your estate plan the best that it can be? When was the last time you really thought about it? Estate planning is one of the most important areas of personal finance, and it's one of the most overlooked areas and least understood by physicians. So in today's video, the first of a series, my colleague, licensed estate attorney Kevin Ducombe, and I will discuss how much you can gift to your loved ones without having to pay estate or gift taxes. As a bonus, at the end of the video, Kevin will outline the pros and cons of gifting assets outright to loved ones versus gifting to them via trusts. Hello, everybody, and welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides key investing and personal financial planning insights to help physicians achieve their key life goals. Before I bring in Kevin, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal financial lives in a fully objective, no commissions manner, while as a legal fiduciary, always putting our physicians' best interests first. As physicians, you'll probably also want to know that Altfest is the preferred wealth manager for members of the Medical Society of the State of New York, and the preferred wealth management education provider for both the New York chapter of the American College of Surgeons and the New York State Society of Orthopedic Surgeons, just to name a few of our medical association partners. As I mentioned, my guest today is Kevin Ducombe. Kevin is a licensed estate attorney, an MBA, and a senior financial planning and estate specialist at Altfest. Before joining Altfest, Kevin was a trust officer at Comerica Bank and most recently was a consultant to financial advisors at Commonwealth Financial. A final housekeeping note, this video is for educational purposes only and not intended as specific advice to any specific viewer. Before taking any estate planning actions, please speak with a licensed estate planning attorney in your area, as well as your wealth management advisor and your CPA about your specific situation. Kevin, thank you very much for being with us today on Wealth Matters for Physicians.
Great to be here.
Great, well, let's get right to it. To start us off regarding estate planning and gifting assets out of one's estate, could you please tell us what is the annual exclusion gift amount and how does it interact with the federal lifetime estate and gift tax exclusion?
So this year it's $16,000 per person. It's going to increase to $17,000 per person starting in 2023. But the annual exclusion and lifetime exemptions are two distinct concepts, really. The only slight interaction is that in certain cases, gifts will first use the annual exclusion, and then what's called the taxable portion, or the portion that impacts your lifetime exemption, will kick in. So if we're using 2022's numbers, 16,000, it would basically kick in at the 16,001 mark. So they sort of maybe layer on top of each other, but they are two distinct items that are tracked.
Okay, and like you said, one, the annual is not counting against the lifetime gift and estate exclusion. The other one is.
Correct, yeah.
Okay, and so let me ask you also, Kevin, we've had people ask in the past, if you don't give the amount of the annual, the full amount of the annual exclusion amount in 1 year, can you just kind of make it up in future years?
Yeah, so unfortunately there's no makeup. And I think a lot of people think of things like the IRA contributions where you can do it till your tax return or something like that. But when it comes to the annual exclusion gift, it's 1/1 to 12/31, and then you just reset again once the new year starts. So unfortunately, no makeup with this one.
Okay, so you're saying, right, if people want to take advantage of the annual gift tax exclusion amount, they've really got to do it by the end of December.
Absolutely, yeah.
Sounds good. And can you tell us, Kevin, what is the current federal estate amount? And then you can also talk about maybe some specific states who have their estate exemption amounts.
Yeah, sure. You know what? I'm going to actually bring up a slide for this. The lifetime exemption in 2022 is 12.06 million, 12,060,000. It's going to go up to 12.92 million in 2023. So very, very large exemption at the federal level, historic highs, in fact. However, there's an interesting quirk with the federal exemption, which is that the law had a sunset provision built into it. So what's going to happen is after 2025, the exemption will essentially get cut in half at the federal level. On the state side, they tend to be a little bit lower. So I know we have a lot of physicians tuning in from New York. That one is a little over 6 million in 2022. Should go up a little bit as well. We don't have those exact numbers quite yet. But suffice to say, it's a lot lower than what we have at the federal level. Connecticut's kind of this interesting hybrid. So what they decided a few years back was they wanted to catch up to the federal level. So they slowly did it. They were increasing it a little bit every year. So in 2022, they're at 9.1 million. But starting in 2023, they're going to match the full federal amount, which is at 12.92 million that I referenced. Interestingly, though, the sunset would also impact Connecticut. So if that happens in 2026, Connecticut will get cut in half at that point as well. Just up the road a little way in Massachusetts, they've had a $1 million exemption really since the early 2000s, and they've just kept it static. And then there's several other states around the Northeast. They tend to be somewhere between the Massachusetts and the federal, so they're all kind of scattered around. But I think thinking of one like the Massachusetts and the big one like the federal, you've kind of got the range of where they all fall.
Thank you very much, Kevin. And Kevin, I'm going to throw you a little bit of a curveball to let you know. I know that some of our physicians are aware, but many are not. Regarding the New York State estate tax exclusion, there's something called like the cliff tax, and it's New York State is notorious for its cliff tax on its estate tax structure. Can you just talk a little bit about like what is the New York State estate tax regarding the cliff?
Yeah, the cliff's pretty unique. So, and it's this incredibly narrow window for some reason, but basically they do a calculation of what 105% of the 6 million and change exemption is. If your estate is over that amount, they go back all the way to $1 and say your whole estate is taxed 100%. Whereas if you only have $6 million, for instance, and I could tell you the exact number this year is 6.11 million. So knowing that if you have 6 million, you're under it, none of your estate is taxed. If you have 6.11 million, none of your estate is taxed. If you have, let's just call it 6.2 million, I think we're safely still under. Only the amount between 6.11 million and 6.2 million is taxed. But then again, if you get over that 105% threshold, all of a sudden they tax your whole estate. So it's a pretty unique thing that you've got to kind of draft around when you're working with your attorneys and thinking through different strategies with your estate plan for sure.
So Kevin, yes, since we just talked a little bit about how you can potentially have to pay a lot of taxes once you go above the estate tax exemption, one of the ways to reduce your estate tax liability is gifting assets out of your estate. Can you just tell us on a broad conceptual level, though, what's the difference between just gifting assets outright to people or potentially gifting assets via trusts?
Yeah, for sure. So outright gifts are nice. They're very simple. You write the check or you transfer the stock and you're done. But the main downsides are in the form of lack of control and a lack of protection. So trusts, they are more complex, and this will come with some costs and some administrative requirements. However, they're highly customizable, so you can tailor them to your situation, your needs. And additionally, many forms of trust planning can take advantage of certain tax rules that allow you to leverage the value of your gift and really just lead to an overall better net result. So you can control it a little bit more if there's issues in the family or concerns when you're making the gift, or even down the road. Sometimes you make a gift, but it really could benefit several generations, and trust planning can really come into play there. Whereas again, if you go the simple route, it's great, but they can do whatever they want with that money after you've handed it over. So that's really the gist of it.
Well, thank you very much, Kevin. You've given us some good information today. In general, estate tax exemption amounts, talking about gifting outright versus gifting via trust, just to get a general sense of what's going on a broad perspective on the estate planning range. So thank you so much for being on Wealth Matters for Physicians today, and we really appreciate the insight you've given our audience.
Hey, thanks for having me. It's been fun.
If you'd like to discuss the information explained in today's video, receive a complimentary analysis of your investment portfolio or a retirement readiness analysis, or discuss any of your other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video below. If you liked today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video interesting or useful, please share it with him or her to help them also get their finances optimized. Lastly, as always, if you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you. So please share your comments in the comments section below. Well, that's all for now, physicians. Thank you very much for watching today's video, and I look forward to being with you again in our next one. Until then, be well, and remember to keep on optimizing your finances, or let us help you if you'd like.